Hi, and welcome to another edition of TraderCast's Daily Market Report. We are looking at Euro dollar in a multiple time frame layout, so daily, 4 hourly, hourly, and 15 minutes. We can see that our daily time frame is clearly downtrending from 1.4 all the way down to about 124. Clearly below falling 20 and 50 period moving averages, but there's a bit of a bounce back here. Our 4 hourly, we had a sequence of falling wedges which played out nicely as continuation patterns, and this one here is actually broken now on the upside, and the price is trading above curling 20 period moving average with some overhead resistance at 26 to 26.30 area. Our hourly appears to be confirming the same reading with this oversold bounce back with the creation of higher highs and higher lows, which looked like a rising wedge, which was really a bearish continuation pattern that didn't play out. Instead, we saw this spike higher. And the same thing is visible in our 15-minute, and the 15-minute time frame is clearly supported by 50 period moving average and 200 period moving average. So let's go to the charts and look at some levels. This is hourly time frame, and we can see that our rising wedge did not play out. They usually break on a downside after the third touch, and that support is at 24.98, 25, 125. Loss of that level would potentially target further downside very quickly towards 24.40, which is this low here, and only a loss of 24.40 could potentially target 23.95, which is a really significant low. Instead, what happened today is actually different. And what we are seeing here now is we are seeing a breakout and a retest of that previous resistance from above as a newly found support. So as long as the price stays around 25.50 and bounces off that level higher, then it would be logical to assume that these clusters of previous highs and lows would offer some level of resistance. You have 200 period moving average at 26, followed by 26.15, then 26.24, and then 26.30. So this area here is really the area of interest for all of the bearish traders who might be looking to initiate new shorts around these levels, and then the price should swiftly move lower, potentially to retest these previous supports. Alternatively, if the price gets sucked into this level and then for whichever reason, maybe ECB rate decision or a press conference doesn't play to the expectations of the market, and the price moves higher, then it will negate that bearishness, and it potentially could indicate something different, maybe a bottoming action here. But overall, we have hawkish Fed, so stronger dollar, and dovish ECB, and potentially more QE in Europe. So fundamentals are indicating that this long-term embedded downtrend is still intact, but potentially move higher might be another opportunity for short setups. Hopefully you found it informative, and I'll speak to you tomorrow during our livecast broadcast. Thanks for listening.